Hi, I am Yatami. Welcome to my video. So let's start. Imagine you want to buy a single share of your favorite company. In the year 2010, if you wanted to do this, you had to face a massive wall. To enter the world of the stock market, you had to pay a fee of $10 every time you bought or sold a stock. For a billionaire, $10 is nothing, but for a college student with $100, that is 10% of their money gone instantly. Wall Street was a private club, and the gates were locked for everyone else. This was the reality, until two friends decided to build a digital key. This is the story of Robinhood. It is a story of how a simple app used the psychology of games to change the financial system forever. Just like the story of Phil Knight and the birth of Nike, the story of Robinhood begins with a friendship at a university. Vlad Tenev and Baiju Bhatt met at Stanford. They were both children of immigrants, and they both loved math. After they graduated, they moved to New York City to build software for big banks. While they were there, they saw how the system really worked. They saw that the giant firms on Wall Street were using the best technology to make millions of dollars every second, while regular people were still using slow, expensive websites. They had what Phil Knight would call a crazy idea. They wondered if they could build a platform that made trading stocks completely free. They moved back to California to start their company. They didn't have a giant office or a famous brand. They just had their laptops and a vision to democratize finance. At the time, the big banks laughed at them. They said that a business with zero commissions was impossible. They said that nobody would trust their money to a tiny app made by two young guys. This was their version of the rejection Phil Knight faced when sporting goods stores told him they had no need for another track shoe. But Vlad and Baiju understood something that the old banks didn't. They understood that the world was moving to the smartphone. To get people excited, they used a very clever bottom-up strategy, similar to how successful e-commerce stores build social proof. Instead of spending millions on TV ads, they created a simple website with a waiting list. If you wanted to get early access to the app, you had to sign up. But there was a twist. If you invited your friends to join the list, you would move higher up in the line. This turned a boring financial product into a viral game. People wanted to be the first to get in. Within just a few weeks, hundreds of thousands of people were waiting for Robinhood. This was their sanctuary, a place for a new generation of investors to hang out. When the app finally launched in 2014, it was unlike anything the financial world had ever seen. Most trading websites were full of complex charts and boring numbers. Robinhood was bright, clean, and simple. When you bought a stock, the app would shower your screen with digital confetti. It used the same psychological triggers as a video game or a social media app. This is what we call gamification. It made the act of investing feel fun and easy. Because the app was free and lived on your phone, millions of young people who had never traded before started buying stocks. But how does a company make money if it doesn't charge its users? This is where the system gets interesting. In the world of modern software, if you aren't paying for the product, you are the product. Robinhood used a business model called payment for order flow. This is a high-margin concept that most people didn't understand at the time. When you click buy on the app, Robinhood doesn't always send that order directly to the stock exchange. Instead, they send it to giant market makers who pay Robinhood a small fee for the right to process that trade. These tiny fees add up to hundreds of millions of dollars. It was a silent engine that allowed the app to stay free while the company became a multi-billion-dollar giant. By 2020, just like the jogging boom helped Nike or the lockdowns helped digital creators, the world changed in a way that favored Robinhood. Millions of people were stuck at home with extra time and government stimulus checks. They couldn't go to the gym or the movies, so they turned to the stock market. Robinhood's growth skyrocketed. The company went from having 5 million users to 13 million in a single year. They were no longer the underdog. They were the most powerful tool in the hands of the retail investor. However, every great business story has a dark secret or a major crisis. For Robinhood, that moment came in January 2021. A group of regular people on the internet decided to buy stocks in a company called GameStop. They wanted to beat the big hedge funds at their own game. This was the war that Phil Knight felt when he had to fight the Japanese manufacturers. Suddenly, the price of GameStop went from $20 to nearly $500. The Robinhood system was being pushed to its limit. On one Thursday morning, the world woke up to a shock. Robinhood stopped its users from buying GameStop. You could sell, but you couldn't buy. The users felt betrayed. They felt like the app that promised to democratize finance was actually protecting the big banks on Wall Street. The reputation of the company was nearly destroyed in a single day. Politicians and celebrities began to attack the founders. It was a massive crisis that threatened the survival of the company. The truth behind the decision was a boring financial rule, much like the American selling price rule that almost bankrupted Nike. Because so many people were trading, the clearinghouse that processes stocks demanded that Robinhood provide billions of dollars in cash as a safety deposit. Robinhood didn't have that much cash ready. They had to stop the trades to save their own business from collapsing. To fix the problem, they had to raise over $3 billion from investors in just a few days. It was a leap of faith moment. The company survived the crisis, but it was changed forever. They had to pay a $65 million settlement to the government for not being clear about how they made money. They also had to remove the digital confetti to make the app feel more serious. Just as Nike had to improve its factory conditions to save its brand, Robinhood had to grow up and prove it was a safe place for people to keep their life savings. Today, Robinhood is a public company worth billions. They have expanded into credit cards, retirement accounts, and even cryptocurrency. They have moved from being a crazy idea to a pillar of the modern financial system. They proved that if you make a product simple and fun, you can change an industry that has been the same for 100 years. The story of Robinhood teaches us that in the world of finance, mindset is everything. They looked at a system that was built for the elite, and they rebuilt it for the individual. They understood that the most valuable thing in the world is attention. By turning the stock market into a game, they captured the attention of a whole generation. Whether you think the app is a great tool for freedom or a dangerous way to gamble, its success is undeniable. It shows that even the biggest monopolies can be challenged if you have a better way of reaching people. Just like the founders of Nike, Vlad and Baiju didn't wait for permission to change the rules. They saw an opportunity, they took a risk, and they built something that changed how millions of people think about money. In the end, the system is always evolving. New tools and new ideas will always come along to challenge the old way of doing things. The path to success is never a straight line, and it is always full of legal battles and dark moments. But if you focus on the product and the user, you can build a digital empire from a simple laptop. You just have to be willing to take that first step. Or, as the famous slogan says, you just have to do it. Note on sources. While the narrative structure, business concepts such as the viral waitlist, gamification, and the payment for order flow model, and storytelling DNA of this script are directly inspired by the provided transcripts for Nike and AI dropshipping. The specific historical facts regarding Robinhood, such as Vlad Tenev and Baiju Bhatt, the GameStop crisis, and the SEC settlement, are based on information outside of the provided sources. I have integrated these facts into the structural framework of the sources to meet your request.